We have a January 12th $29 put on Oracle that we have to sell. And what we are going to do is we're going to put limit orders out at around that 340 handle. And where is that at? Well, it seems to me that it's going to be right up here, right there. All right, now that would mean that Oracle stock would have to continue to sell off at the print of 25.91 by 25.92. What it does mean clearly is that the bad earnings miss that people don't like, and that's why we took that January $29 put, and buying the dip on the long end and selling back will help produce profitable SMF MMT debit spreads. Volume count would be, the 1,000 share and take the 50 penny trade that way. However, we will put the contract out here because it's a January, and this is where the top of that slide was back over here on 10.4 when the markets had put in their bottom. That's when the S&P was putting the bottom in at 10.75. People really got stuffed in them that owned them way up here at 522. That's potentially, but you would have to sell down to ever even think that you're going to get any of the pricing levels up here. You would have to sell down over, you'd have to find where those fund managers want to come in. I know I would be starting to buy around 23.5. I'd like to start taking a little bit right there. So that's how people are always going to view an icon company in a software such as Oracle. They're going to view it that way. And the thing about it is, though, it is the time of year to try to get this thing down to levels where people could own it. Because if the further that they drive down the price, eventually we'll have to get the call side of the market. So that's how this trade works. These are the upper supply levels. Here's a level I was talking about at 250 on the opening bell. We'll see if they gap it up above there or not. The last high reversal on this contract over here was $2. So you're going to have to gap up in this range as they had originally marked to market down. You could see the markdown. It went right to here. And this low was 55 cents. That was the real markdown lows in these puts, the $29 ones. We're in right about over in here. So with the gap down on how they steal premium, they may give you very little upside premium on the opening bell, but that's where I would start buying more premium and adding to my position. If they were to only gap this up to $1.50, I'd add another 10 contracts right away. That's the opening bell on Oracle $29 puts. Premium value from the markdown value to the gap value, the fair value of that is right over here in this price level. Does that mean that the people in the pit who manipulate markets are going to give what the public is deservedly and rightfully for? Probably not. So we're going to watch the name. We're going to trade it. This is the last markdown. This is that area. Okay. And that's to this markdown. All right. And that markdown point is about 389. And we're out to sell out at 340. Selling into the string. Now, we'll see if they give it this gap ratio to that X or not. Or what gap ratio are they going to give it? And if they was to get, but we're going to see within these X's right here where that price lands. Does it land right in here and then continue to go higher to limit out the exit? Because if we land right in here at this first X and move higher into the last part of the trade, we could get executed.